Today, we are going to give you a market update. First, we'll say, the market is paused right now.
It definitely is. Last year at this time, we were still burning and turning and seeing a lot of activity. People were out looking to sell. People were looking to buy, but the market was so tight that buyers didn't really have an opportunity to get in unless you had several $1,000s over list price or could make a competitive cash offer. What's it like now, do you think?
Now we're seeing the opposite. We are seeing a surplus of inventory. We are watching rates going up. And so our buyers are pausing. They're taking a moment to assess the rates, especially some of our younger buyers who have not seen the rates this high.
I think it's like the highest in 20 years.
It is.
That's what I heard.
It is.
Yeah.
And so, our buyers have been spoiled for the last few years, seeing rates from, 2.75 and 3s and the 4s. And so this is what a normal market looks like.
It is.
And our buyers are getting used to it.
They're just figuring it out. That people need to get their mind around where the interest rate is going to go. And the thing is that people still need to buy and sell. People still need a home. You need a home. Everybody needs a place to live.
So it's not the worst time to sell, but it's certainly a good time to buy. There is so much inventory on the market. We've seen the inventory double this year. And, if there's that many houses, there's just that many opportunities. You can get something below market value. If you're thinking about investing, now there's just less competition.
That's right.
I think it's deal season.
I think so too. And historically, the winter time in Austin is the deal season. Less people are bringing their homes to market. They're settling in for the holidays. And it's a good opportunity that if you're out there looking, you have more homes to look at.
You do, and you have a moment to think about it. You don't have to write the offer
as soon as you walk in the door.
Yes. Yeah. So you can actually do your due diligence. And then I would also say on the other side, sellers, you have to make your house presentable now. You need to go in and fix things. You need to paint. You need to make your house shine because now it's got to stand out from the competition. Whereas a few months ago, it was the only house on the market in a neighborhood.
Yeah, you could just put some pictures up and off you went. Now you really got to focus on those key details that are going to make buyers want to come to your house and think that it's special. Hey, did you hear the jobs report came out?
Yes.
Unemployment rate is very low. And usually that's not the case when we're going into a recession.
No. So it's definitely a different kind of environment that we're working within, and economists are following this closely because it's not following typical patterns.
It's really not. The thing about Austin is that it is one of the greatest economies in the country.
It is.
And we have a lot of people moving to the area for job growth, for school, for quality of life, lower taxes. And so I don't think that there's going to be less people moving to the Austin area in the coming years.
No, I think next year we're going to see demand continue to increase. There are all of these tech jobs where the employees aren't even here yet. So, and definitely the city of Austin is giving incentives to move these big companies here, offer this big land, whether it is south of Austin, outside of Austin. A lot of people are looking at Lockhart and seeing, there's just a ton to develop out near Tesla. There are some really good opportunities to bring in jobs. And we also have a diversified workforce in Austin. So we're not relying on one industry. We have several industries. So as, the market kind of goes up and down and the economy changes, Austin has always been fairly recession-proof in that way.
I also think it's interesting what's going to be happening with the builders in the next year. How do you feel about that? I think they built so many homes. They were trying to keep up with the demand, and now they're backing off. They're giving incentives for the first time ever.
Absolutely. They need realtors again to come show their houses, and them pausing on building some more inventory, I think is going to create some scarcity as we head into spring. We're not going to have so much inventory, which is not a bad thing. But we'll definitely be watching, what builders are doing and how they adjust. As we've seen over the last year, it's been about supply chains. That has been the focus of what they're trying to address and improve. Now that's getting better, but their houses are sitting a little bit. So if you're looking at new construction at the end of this year, now is the time.
There is a great opportunity to get in before the end of the year and actualize on some of those really great incentives that they're offering.
Huge incentives right now, whether it's money towards buying down a loan, if it's off price. I mean, we've even had some clients who have been able to get a savings after they were already under contract because maybe they can't afford as much. And so the builder doesn't want to lose those deals.
They don't. They want to get those done by year end. And an interesting thing about that too is that I see a lot of sellers offering to buy down the rate. So you may be looking at a 7% rate, but you can ask the seller to give some contributions to make that a little more attractive for you and keep your monthly payments where they need to be.
Absolutely. And as we start talking about rates, that is the hot topic right now. You know, rates are going up.
Yeah.
I don't think it's going to slow down. I think we're going to see some more increases into the spring.
I do too. The Fed's going to do another adjustment, and that's going to trickle down and change rates for all of the mortgages.
So now's a great time to, again, take advantage of those buy downs that sellers are offering, because when we have less inventory next year, it's maybe going to slide a little bit more in the seller's favor.
And one of the things that I think is going to happen is that people who bought in the last couple of years who have these amazing interest rates, you know, 2.75, 3, 4.25, all of those people are not going to sell their houses. They're going to realize that if they move up or they move to a different area of town, that their interest rates could potentially double. So they're going to hang on to those houses. They're going to stay put. And so that's going to give an inventory crunch again come springtime.
Yeah, I agree. So again, if you're thinking about buying the next year, now is a really good time.
It really is. And we can help you find the right house, run those numbers, make sure it works for you, make sure that you're comfortable with where things are, even with the interest rates as they are. I mean, I've seen interest rates in the 12s. So I've been around the block a few times, and this is nothing new. Everything's cyclical. And what was the term that we've heard people say? Date the rate, marry the house.
Date the rate, marry the house. Interest is higher, but if you're renting right now, that is 100% interest. So 7%, 8% doesn't look so bad when you realize that you are investing in your future self, and you are going to be able to pull that equity in the future. But if you rent, that's throwing money away. So.
It is. And you don't want to be looking 5-6 years down the road going, gosh, I wish I would have bought something, because now here I am. I've been renting this whole time. I've built no equity. And now I can't maybe even afford to live in the city because the rents are so high. We also see that. Rents are raising. And that's changing what the affordability of Austin. So we want to make sure that you're making good financial decisions for yourself and your families.
Absolutely. And waiting for rates. I know a lot of people are saying, oh, well, when rates go down, that's when I'll buy. I don't think that's going to happen for a while. And you have to remember that a 1% increase in rate is 11 to 12% less house. So if you're saving up your money right now, and a year from now, that rate is 1% higher, you're losing buying power. Like you're just losing buying power by waiting.
I agree. Important.
An interesting market indicator that we are seeing is that commercial has not slowed down. So if you're looking at residential and worrying that the market as a whole is crashing, commercial is still going hard.
They are.
So, you know, if they're looking at projections 5, 10, 15 years from now and they're not worried, I mean, yeah, you move where the people are going, and I don't see a slowdown in the Austin area.
I don't either. I just see growth. I mean, I've been in Austin since 2001, and I can't begin to express how different the city is now compared to how it was, and I wish I would have bought more real estate then. But I don't want to be saying that in another few years. I'm trying to invest now. Recently just bought an investment property. One thing that a lot of people are focusing on in the financing world are ARMs. Because what you can do is you can have a shorter term. Historically, people are doing a 30-year fixed loan, and that's not always the best financial decision for you if you think that the rates are going to change. Also, a lot of companies are offering to refinance at a low fee or no fee. So talk to your lenders, talk to people that we know. We can get you hooked up with the right people.
I agree, because if rates were to magically go down, you can refinance. Like, this is always an option. There's going to be lo-fi refis available. Our lenders are ready for that.
They are.
If rates go up, then you got in at a good time. And if they stay the same, then you got in before the property appreciated, because properties are still going to continue appreciating. At least 4 to 5% is kind of what we see in Austin, and in the last 2 years, definitely higher than that.
Right.
But
in fact, I actually don't think that was a good thing for Austin. That huge bump to 20% year over year. I think that was abnormal for Austin. It's not great for a steady market. I'm looking forward to this new market where things are a little more steady. People have a little more time. Houses are going to look better when you're walking into them too. I got a little tired of walking into homes where there's a lot of repairs that needed to be done. And people are accepting those repairs. I mean, I just didn't, I felt that there was a lot of things there that could be different in the coming market.
I agree. I'm actually getting things negotiated now, repairs made, HVAC systems serviced,
new roofs.
All the major systems are being addressed, whereas a few months ago, it was just a buyer problem. If you wanted the property, you accepted it with all of its flaws. There was no negotiating that. So again, you can get a better quality home in terms of what you can negotiate in repairs or having the seller make those repairs up front at this time in the market.
That's right. And I have a seller right now that's about to come to market, and they're also buying. So they're moving up. Their family has grown. They are putting money into their current home to make sure that it's ready to go, like we talked about before. They've got new flooring, a new roof, they've painted, they've made it market ready. And we had a discussion about the price going to market, and I said, look, it's not going to look the same as when we discussed 6 months ago. They said, that's fine. We totally understand that, because also when we're going out into the market to buy, we're not going to be coming up against those high prices and a bidding war. We didn't want to enter the market at that time. We weren't ready for it. So I think in general, it's going to be better for everybody.
I agree. And also loans that we typically haven't used in the last few months, like a VA loan or an FHA loan or a USDA loan, where you have a low down payment going in. These were not competitive in the market for the last 2 years. So I'm telling all my VA buyers, come back. This is your moment. Yeah. This is the time where your offer is competitive and you can use those VA benefits to your advantage.
Sure. And also, even if you're selling in this particular point in the market where it's a little slower, it's the fall season, if you look at your appreciation from the time you purchased it to now, I don't know anybody who hasn't done well in appreciation. No. So if you're looking to sell, you still built equity over that time.
You did, unless you bought like in the last 6 months.
Well, that's different.
That's different. But honestly, 6 months or more, we're saying you have, equity in your home.
Sure. And most people stay in their house for 7 years.
They do.
Yeah. So I think, most people have built up some good equity and are ready to maybe parlay that into something different.
And that kind of brings up another side point. Since you do have all this equity, if you need a cash out refi, this is also an interesting time to consider that if you really need the funds, or if you're thinking about investing in other properties and taking the equity from your current home to go take advantage of all these amazing rates amazing opportunities now.
Yeah, because there's a lot of opportunities to reinvest that equity.
And the rental market is hot.
It
is. It's worth thinking about.
Yeah. Awesome. Well, these are all really great points. I'm super glad to talk to you, as always.
Me too. I hope y'all found this helpful. And if you have any questions, give us a call.
Thanks. Bye.